Hi and welcome to the market alert for Wednesday the 16th of December 2020. So yesterday futures jumpers, vaccine optimism and stimulus hopes return. So McConnell and Pelosi are still trying to pull off a stimulus deal before Trump leaves, but apparently they're running out of time. So let's have a look, see what the market did yesterday. It did a bit more than I thought it would, especially in the morning. I forgot to turn on the record button for the main part of the trade, but again I can just go through this quickly. It's straightforward trade. The market coming down to the 200 MA and also the BRN there, the big round number, with what looks like selling, but the market closing off the low, and then immediately followed by the buying that you see here and inside of this bar. Also then at the DP, and then prices break through the DP, continue higher, trade sideways here and come back below the 5 bar moving average for 1 bar, and then just closes below there, and then once we close back above, prices then continue all the way up towards the high, where you see prices closing back here after they were triggered in this area here, where we've got the selling coming into the market just there. And then prices trade sideways. So a nice trade there for the morning. Again, these target prices are quite something, along with the 5 bar moving average as a way of measuring the momentum in the market. And something I've noticed of late is how once prices close back above these areas, it allows you to either add or get back into the market if you've been stopped out, or take profits, etc. So again, you can see the cluster of volume here once the market reaches these critical areas, and then the price action confirms that there is potential selling. You can see there 90% of the volume in this bar compared to the previous bar, but the range is narrower, so that means that there is some profit taking at this level. It soon drops off, as you can see there. Once the selling has disappeared, prices close back below the 5 bar and then start to move back above once more. But I'm going to fast forward through this. You can see there it's sideways, and then you see how prices held with the odd bar closing back below, and then eventually it moves higher. But the 5 bar moving average is a really good measurement of momentum, and that's why I like to use it. And just because it closes below doesn't mean to say that prices are going to reverse. It's just like there's some sort of profit taken in these areas, and then once the market is free to get back above, it will do so. And if not, it will trade down to the 20 bar moving average, and you will see the same sort of price action there. So you get 2 bars, well 3 bars there that close below, but it's sitting on the high and the R1. All it needs to do is to get back above the BRN and the 20 bar moving average, and then it's free to attack the recent high, which we see over here. So again, you can use all of these areas, which you'll see shortly as we go into the afternoon session. So there we've got another potential buy signal, but immediately we're hit by this selling pressure. We can see the selling pressure there because the volume is far greater than the previous bar, and the range of the previous bar is far greater than the selling pressure bar's range, and that means that there has to be selling in this bar. So until this is removed or either followed through with further selling, then the market will have to wait. And there you see again the volume dropping off, and then eventually prices moving higher, taking out the resistance that we see at the left there. So that was the morning session. Prices then continued up, and then profit taking came into the market, but mission accomplished. Got back above the previous day's high, which is something that we always want to see with regards to the markets. We don't want to see the low breached on the bullish side, and we want to see the high taken out. That's what we're always looking for. So in the afternoon, I'm just going to wind this back a bit because I was at the desk and I thought, right, let's have a look, see where we are. I drew all of these fibs in, which we looked at yesterday, gave us the areas of where there was potential resistance in this market, and how we could keep an eye on these as areas where we would find some sort of resistance. However, the market in the afternoon, you can see there we've got the high. The market shot up to the 53, and the 58 was the 78% retracement in the daily chart. So price is having a look at that, but failing by 5 points. So let's fast forward through. I'm going to go quite fast through this because the market wasn't doing anything. This is the interesting one. I'll mark the high up on this later in the video. But that's actually traded up to the 78% retracement that we saw in the daily chart. It's this bar which traded through it. Anyway, let me move on because you can see the market sideways there, and then it started to move lower, and you can see the volume building in this bar where prices are trying to find some sort of support. They're not selling off, the volume's greater, so that means that there is some buying support coming into the market. So prices, again, you'll see this here as well, the following bar, the market closes higher, and then you see the volume also increasing there. So again, price is back above the 5 bar. We're seeing the opposite of what I was talking about in the morning session. And then price is trading up to the 20 bar moving average, and you can see they fail here, no follow through on the buying, and prices are brought back, and then we see the market testing the lows to the left. But it's quiet, and the market's just sideways. So now we see prices closing back above the 20 bar moving average, and then I decide what I'm going to do is have a bit of fun, because the market say was quiet, and I thought, what can I put into the market alert for this morning, just to show you how you can occupy your time even when the market's quiet. So what I'm going to do now is I'm going to spend the rest of the afternoon just playing with the fib retracements. The first one I'm drawing from this high to this low using the fib retracement tool. And I want to see how much strength this market's got, having moved off the lows, retested the lows, which I see here, coming back, and also having just taken that out. So the rest of the afternoon session now, you're going to see me drawing these fibs in, and I'm going to go through them quite quickly because we've got this major area left behind and also down here. So we just want to see what strength the market's got in its attempt to move back up to that 60 level, which we see here. This is the one I was talking about from the daily chart, where we had that 78, which was at 58 instead of 60. So that's why the market stopped there, moved lower, tried to move back, then we get a retracement, and we've got a fib retracement here of over 89, or a double bottom, and then prices start to make their way back to the upside. And the reason I'm doing this, one, of the market's quiet, and I just wanted to have a play and also have a look at the price action around these levels. And again, you can see here, even though the volume is small, we've got a bit of an increase in volume compared to these bars here, all these other bars here where the market's moved. This as a tiny bar, but there's an increase. It's subtle, and you can see that once prices close below the 5 bar moving average, they oscillate a bit, and then it increases and then continues to move lower. And you'll see now as we break the 20 bar moving average, and I'm removing the fibs as I go because I wanted to see how far they would move down. So I'm just going to rewind this because I didn't show you me actually drawing this on the chart. So my reason for drawing it on the chart, we've got a low here and this high is left behind, and we've got this increase in volume here. So once that's in place and that high is left behind, so all I'm looking for are new highs, new lows that are left behind, and then drawing the fibs in and just seeing the swings in the market. So again, you can see the volume increases there and also there, and then we get down to the 89%, and this is where it gets interesting, because watch the volume at this level. You can see again, this is 90% of the previous bar, if not more than 90%, and yet the market's found support at this 89% fib. So from here, the market starts to turn around. So now I've drawn from this high and this low, because it's left this low behind. and I've got the selection there to see what strength we've got as the market moves back to the upside. And this is classic sideways trading range here, but it's good to actually see how this moves. So again, now we're starting to see prices move higher, and we trade up to the 89%. And then what I did here, I'm just going to wind this back, is I redrew in the high to this low, because we never got back to this high here. So what I'm going to do is to use this what I would call a major fib retracement area, and see, because at the moment I'm just looking between here and here. So I just thought, right, well, if we break this area here, the recent high, then where are we? We're in sort of no man's land as far as the fibs are concerned. So what I do is draw these back in. And there's also, as you'll see as we go through this, so we've gone through the 89 now of the smaller time frame or times swing there, and through to the recent high. So then I can remove this, but I've got the other ones back that we had from here down to here before we had all of this, and when the market was first moving higher here before making this pullback. So it was just an academic exercise just to show you what goes on. So the market traded to 62% from that original swing and then came back. And again, watch the volume. Look at the volume at this level when the market hit 78 there. And again, you can see now it's far greater than the previous bar. This looks like a lot of selling going on, but there's not. But at the 78%, we have some buying pressure coming into the market, which we can see here. So at this level, the market then starts to turn around. So now I'm drawing from here down to here to project back here. And now I can see I have a confluence of fib retracements. Again, those original ones from the initial move to the downside. And these are just short-term swings and trades in the market. And you can see now we go to the 89, and I'm just removing all of the others just to keep things clear. And also I've got this new high that's left behind at this area. So just in case prices move to the downside, I can see where it's likely to stop. So again, as we move forward, prices start to trade sideways, and then they start to move back up through the 62 and now stop at the BRN. And once more, as we move forward, again, you can see we've got an increase in volume here. The market's not breaking through, and a tiny bar. So there's some resistance here as well. And all of these bars I'm going to get highlighted automatically in the software. So even though they're below the average line, whereas all of these are the ones that are highlighted, the major ones, the buying and selling, the buying and selling pressure bars or absorption volume bars, I'm going to get automatically highlighted in these areas. And then when you combine it with the fibs, they really do give you these short-term trades to the up and down side. So what I did, I carried on because I was fascinated by what I was seeing. So the market again now is moving down back to the downside. And here, what I did, I went back to, because I'd drawn from here to create these fibs, I have this low here also to here. So what I did was add this in as well. And you will see there we have all of these areas of double support in the fibs. You know, they're more or less in the same area, which will add and lend support to the market. So as the market breaks through these areas, I'll then remove them. But you can see how this the double fib there held, and then eventually it broke. And then we've got the next double fib, which the market had to put a big bar in to drive through. And then as soon as we get down to the next double, we see prices trying to fight back. And they do, and you can see huge volume there. This is a news item as well, which I'll go on to in just a moment. And then prices just shot to the upside. But again, you can see how they came down to this area here. and if you've gone short on these where you've got the previous resistance, then you, at least if when something like this happens, you are at break even, or you're trailing the stop down and taking profits as the market goes to these fib levels, particularly 78 and 89, because it's generally a point of exhaustion, which is what you've seen in all of the afternoon trading there. So the market then just shot up. It was a news item. I tried to look for it, but I couldn't find it at the time. I thought it was something that the Irish had said about the let's have a look there, about Brexit. I picked the news up off the MT4 news feed, but it wasn't that. What it turned out to be was this, that the Electoral College makes it official: Biden won, Trump lost. And it didn't really hit the mainstream media, but the market loved it, and they reversed the market, and they traded it back up to the 89% of what we had in our original fibs. It traded up to this level, and eventually it continued to move to the upside. It broke it and then continued. But there you go. So an interesting afternoon, even though the market was sideways, which we can see here. There's the full picture. And then when we got back to here, the market then moved with the Dow and headed north, moving up 300 points for the Dow, and then the DAX continuing there with the news that Biden looks like he's got the gig officially, well, according to the Electoral College, and I think one Republicans jumped ship as well. Anyway, overnight we can see that the market is gapped higher, still on this sort of news, but we're below the 200 MA for a while, above the DP, so bullish as we see it at the moment, trying to get above the 200 MA there, failing, and then another attempt here. So let's see where we are at the moment and just reset the chart. So we've got prices buying back in at the 200 and moving up to the previous day's close. We've got to get through the previous day's high, which is going to be sitting up here. There's your previous day's high, not too far away at all. And in the daily chart, we'll see this a bit more clearly. I'll drag this over, and there's your 358, which the market traded to 360 in the afternoon before it had a move to, well, pull back, didn't it? It pulled back and then eventually went straight through this and through the 89 that I drew in before the market opened in the afternoon, or before the afternoon session, before the Dow opened, and prices heading back to the 13,449 now. Okay, let's have a look at a couple of other things. I'll keep it brief because I've gone on for a long time in this one. We've got the implied volatility down as well, supporting the up move yesterday, down at 1953 from 2068, and we're back to green in the color coded implied volatility as well. And I suspect that this sideways is going to continue for a while unless there is a no deal Brexit, which I've heard a rumour of overnight and seen a video of on YouTube, but I would have thought that would have made headline news, but apparently some sort of news has been released, but we'll wait and see. Don't believe anything until it's officially denied, as they say. Now, this morning is going to be a pain in the proverbial, because it's the flash news, and it's just an absolute pain, isn't it? Because from 8 AM till 9:30, if it starts off with the Germans, then the manufacturing flash for the Eurozone, then the GBP. We haven't got the French and Italian this time, but even so, we're only half an hour between all of these once the news starts to come out. So just be aware of that. Retail sales at 1:30, and then we've got the US flash at 2:45, and then tonight we've got an FOM statement. At the moment it's showing there's no easing, but on Zero Hedge there's a couple of articles that are saying that it's the last chance that Powell will have to ease before Biden takes over, so we'll see. And also because it's December, he will be having a press conference as well after any decision, so we could go to zero, who knows, we will see. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.